go ahead and just start that now. But uh, thanks, for folks who were able to hop on, and for folks that are going to be hopping on here just in the next little bit as well. We're excited to get this new program called NXTCONNECT started and launched here in 2021. But maybe a quick background. I think I know most of the folks on the call, and probably the folks that'll be jumping on here. But I'm Quinn Robertson here on the team at Nextus, local startup support organization here in Wichita, but really just a team of 4 people that are waking up every morning trying to help local and regional entrepreneurs. So this program, NXTCONNECT, is a new series that we launched just a few weeks ago. Really just dedicated to helping provide information to entrepreneurs and founders, get them connected to the right people, the right topics to help them grow their businesses. So we'll host these monthly, last Friday of the month, in person if we can, but probably virtual for at least the foreseeable future, or simulcast if possible. But we'd love to get folks back in person, but we'll see what the world will let us do. But getting into the first one today, this first session, we've got Wayne Bell from the Kansas SBA, and we've got Kristen Buckles from Fidelity Bank as well, just to give us kind of an inside look and perspective on the PPP loans that are going out with Wave 2 that's just been launched here in the last few weeks. So thanks for both of you taking some time out today. Certainly appreciate you offering up some of your perspectives and time and insights on this. So maybe I'll do some quick introductions. Wayne is the district director of the Kansas SBA. Really kind of focused on assisting entrepreneurs with access to capital, business expansions, other services, and all of that as it relates to the SBA program. And then Kristen Buckles as well from Fidelity Bank on their PPP task force, I think is what you all have dubbed that, which is cool, and really just helping to drive that effort within Fidelity, those operations and that planning on that front. So really, format for today for folks that are here, I'll probably give each panelist a few minutes to give a little bit of their background experience right now, and we can kind of probably start with Wayne and then jump to Kristen afterwards. And then after that, really just go into Q&A. The entire intent of this group is just to give folks a chance to ask questions from some really smart people in a certain area. So feel free to text me, chat me, if you want to at some point unmute and ask a question as well. Certainly feel free to do that as well. We want to make this as informal as we can as well. Another FYI, we are recording this, so I'll be posting this up for folks to see as well later on. So all of that out of the way, I'll hand this over to Wayne here, and let you kick us off. Thanks for joining us today.
All right, thank you so much, Quinn. Really appreciate the opportunity to share. Really respect and appreciate all that's happening with Nextus. And I'm proud to say that I've just joined the board and looking forward to working closer with your group all around the hopes of really just raising awareness and connecting entrepreneurs with resources that can help advance, their concepts, and particularly innovators. We want to continue to, support that community and continue to move them forward. I've got information that I can share. I've got a few slides that I want to show, but what I would like to do, I guess, before doing that is just tell you a little bit about me. I've been in the role of district director for the Small Business Administration here in Wichita for the past 12 years. Great opportunity to visit with a number of entrepreneurs, stakeholders, lenders. So we work very closely really with that entire community and ecosystem that supports small business. The SBA itself is a federal agency that was created in 1953, all around the mission of helping entrepreneurs to pursue, those that wanted to go into business, to pursue doing that in an informed fashion with the support of the federal government and with the support of resources that could help them move forward. So it's been a great honor to be in this role. It really has afforded me the opportunity to meet a number of fascinating entrepreneurs in our area and beyond. And so anyway, I'll stop there. I'm a graduate of Wichita State, both undergrad and master's degree in business. So go Shockers. And again, pleasure to be with you today, and looking forward to taking a deeper dive into PPP.
Very good, very good. Maybe if you want, let's just go ahead and if you've got a couple of slides to go ahead and get started on, maybe we can just hop straight into there as a starting point here.
Okay. All right, can everybody see that okay? All right, good deal. So as you all know, PPP went live. This iteration went live as a result of the recently passed Economic Aid Act, which passed on December 27th, 2020. And so applications went live for PPP first with underserved communities and through community lenders, small nonprofits, nonprofit lenders, mission-focused lenders. That went live January the 11th. Bear with me, I'm gonna see if I can get these to advance. Okay, and so we'll go through a few of these key dates, and then we'll get right into first draw, second draw, and then ideally answer a few questions, because invariably there are going to be questions about things like how to calculate loan amounts. Am I eligible if I've already received a PPP loan? How do I utilize that second draw? What's it take? That sort of thing. So for the sake of time, I'm going to go by this. But again, initially we rolled out with underserved communities as of January the 11th, and then that same community. And what the idea was, there was a lot of public complaint about underserved communities not receiving their fair share of the Paycheck Protection loans. And I think there was really valid concerns there because really what drove, and those of you who may have obtained a PPP loan, and for a lender on the line here, a good part of that, you really had to have an existing relationship with a lender in place. And often what happens in underserved communities with women business owners, minority-owned business owners, often those relationships aren't in place. And when this program was rolled out, that was a big factor because there wasn't the credit check that normally comes into play, with this financing and everything. And so in the absence of some of those relationships, there were some businesses that were left out of that process. So there was deliberate effort on the part of our legislatures, and then deliberate effort in terms of SBA to make sure that we do better this time. And so that was the idea, was with smaller banks, nonprofit, mission-focused lenders having the first opportunity to submit their applications. We think that we've made an impact there. And that is a continued focus for the SBA. So moving forward, down here, as you look at the dates, as of January the 19th, PPP opened first, and the second draw applications to all other participating lenders. So really, as of January 19th, across the lending community, PPP applications could be submitted. And then as of January 25th, those first draw increases were enabled. And those first draw increases may have impacted, I'll give an example. If there were recipients of the first PPP loans that perhaps didn't take their full amount, or if there were some entities that were partnerships and maybe they didn't include some of the partner earnings, in that initial calculation, well, they could go back and submit for an increase to the first PPP loan. Assuming that they hadn't already obtained forgiveness, they could do that as of January 25th, and that will remain available to those in that category until the deadline of March the 31st. All right, so just very briefly on PPP and what that is in terms of first draw. it's really what we saw in the first round. You know, these are eligible small businesses and nonprofits, and actually that's been expanded for this new round of PPP. It's been expanded to 501c6 organizations, and I've got that all coming up on the next slide. There were some, and one category I'm kind of thinking about. You know, you had venues, many venues, entertainment venues, that sort of thing. They were essentially kind of left out, you know, and there were some entities that were left out in that first iteration of PPP, or, you know, that kind of thing. So there were some additional resources that have come into play now with this round, and we'll chat about that here in a second. All right, so again, housing cooperatives are included in this group of new eligible entities. Housing cooperatives, destination marketing organizations, 501c6 organizations, eligible news organizations. And then the other entities all remained eligible. One absence there in the list has to do with the faith-based community. They typically fall under 501c3 nonprofit organizations, but it's important to note that faith-based institutions are eligible as well. All right. So when we talk about the second draw for PPP, this is really interesting, and I think a really good opportunity for those that obtain a PPP in the first round who continue to be impacted by COVID. They have to demonstrate at least a 25% reduction in their gross receipts, okay? And that's comparing either revenues year over year, 2019 to 2020, or comparing comparable quarters from 2019 to 2020. And in some cases, there are entities that perhaps were not in operation in 2019, but were in operation early in 2020. They would be able to compare the first and second quarters to the last part of 2020. So really a lot of flexibility there to demonstrate the 25% reduction in gross receipts. One of the questions that's come up just as recent as yesterday, we had a restaurant owner that contacted me who had multiple locations. And in total, their revenues were only down by about 15%, but by location, he had some locations that were significantly impacted, some as high as 60%. Well, unfortunately, it all rolls up to that same employer number. And so if they're not impacted by 25%, they would not be eligible for this second draw. But those that are above that, certainly 25% and above, certainly would be. All right. And here's just the eligibility criteria. I think it's important just to show this. You had to, in order to be eligible for this, can't be, the first PPP could not be fully forgiven, okay? But it does have to be used before the second draw can be dispersed, okay? And that's been subject of a lot of conversation, particularly with our lenders, because what's interesting is lenders have a requirement to disperse a loan within 10 days, the PPP loan within 10 days. But then there's also the specific criteria here, and it's a conflict that has got to be worked through, that the second draw cannot be dispersed until the first draw is utilized. So it's a bit of it's kind of a conundrum there, and it's something that at our headquarters level, they're aware of it, and they're working through that now. All right. And so here are some other updates in terms of the idle advances for those that obtained the PPP loan in the first round. When they applied for forgiveness, the idle advances were deducted, right, from their loan amounts. and that now is being corrected. So those from the first round are going to be refunded what was deducted, and moving forward, these deductions will not occur again from their loan amounts. So that is one update there for those that may have received idle advances. And then it's important, that second bullet is a pretty important point. Forgiven PPP loans are not taxable income. However, expenses paid with PPP loans are now tax deductible. So that's an important note there. And again, the debt relief payments do not count any longer as income. And for further details, the IRS has posted a nice information notice on this entire subject. And if you have any questions, feel free to reach out to us offline. Also, for those loans that are at the level of 150,000 or less, the forgiveness process has been streamlined. And I know everyone is excited about that. And that was something that the lending community, you know, it's a lot of work. The lending community has to verify and they have to substantiate the information before they upload it into the loan portal for the SBA. And as you could imagine, it's a ton of work for them to do that across the volume of loans that have come through. So to streamline that process for loans of 150,000 has helped to make it a bit more efficient for the lending community in that process of loan forgiveness. And so just wanted to show this here. This is the PPP loan calculation in general. You know, it's based on your average monthly payroll cost as it was reflected in 2019 or 2020, or 2020. And basically you're going to take that, you know, that the average monthly payroll cost, multiply that by 2.5. And remember, for the second draw, for those that are in the accommodation and food services industry, that actually has been increased. That calculation's been increased to 3.5 by that average monthly payroll to try to give those affected in those industries a bit more assistance. But this is the basic calculation. We know that for ag-related industries, the Schedule F comes into play, and then for partnerships, I forget the schedule that comes into play, but we know that the calculation and the methodology has all been updated to properly reflect and capture those LLCs that have partners, as well as for the ag industry. So we've got a full listing of all of the calculations on the website. And certainly if you contact me offline or if you submit any questions here, we'll be sure to get you your specific answer on. And just very briefly here, I just wanted to show, you know, kind of what the activities looks like so far. If you look at the second or the third bullet there for Kansas, and this was through January 24th, we've already seen over 9,000 loans to the tune of 466 million, you know, supporting $466 million. So pretty good activity there. The lower half of what you're looking at shows you how things shook out through August the 8th. And we saw really good activity in Kansas and certainly in the Wichita district. The Wichita district office, from our office, we saw over nearly 28,000 loans. I mean, 28,000 loans. And I'll tell you, that's the equivalent of like 30 years of SBA lending in normal times. I mean, it was incredible. Kristen can probably, you know, she can validate that one. We've just not seen the volume that we saw from the Paycheck Protection Program. That program was truly successful, and it's the reason why it's continuing today. I mean, it has definitely been successful in terms of getting capital out to impacted businesses. And remember, I think it's important to note this as well. This is not capital that's intended to help with new projects or investments in new equipment, that sort of thing. This is really intended, the spirit of this program was intended to help employers keep people employed. throughout this pandemic, it's just another resource to help impacted organizations to keep their teams in place. That really was the spirit of this. Now, we do have some other benefits in our normal programming. This slide here just shows you, and it really just represents, there's a wide spread of industries. So from those that touch on innovation and technology, all the way down to, retailers, mom and pop organizations. So this really had widespread impact. But there's some other things that are coming into play that I think this group really ought to keep on your radar. For our normal programming, the CARES Act did this, and now the Economic Aid Act has continued it. There's debt relief that will come into play, and here pretty quickly. I know the information notice has already been out. I'm not sure, and perhaps Christian can help us here. I'm not sure if it's made its way to lenders yet, but for those borrowers on SBA loans, 7A, microloans, and 504, SBA is going to cover payments on those loans for 3 months, full principal and interest payments. I know minimum 3 months, possibly as high as 6 months. It just depends on the funding in place and whether or not they'll be able to go the full 6 months. But I know a minimum of 3 months, this debt relief is going to be at play. Yep. And this slide just shows, all of the usages for SBA funding. So pretty much everything you're looking at. The only things I would kind of raise awareness of, it can't be used, normal SBA funding can't be used for passive investments, real estate investments, that sort of thing. But all of the inventory, working capital, all of the assets that you need to operate a business, you can utilize SBA funding. All right. We've got a host of resource partners that you all are probably aware of. If you just go to our website, sba.gov, local assistance, you can find our partners and the network of partners there. All right. And so I'm going to stop with this one. This is just our local contact info, and I'm looking forward to any questions that come out of this.
Sounds good. Thanks, Wayne. Definitely a lot going on that front, and appreciate kind of some delineations between maybe what was going on previously for the previous round and changes to this round as well, because I know there's a lot of information floating out there, so certainly appreciate that. But maybe jumping over to Kristen, I'm curious, in your world right now, what are you seeing? Any areas of interest that we've got a lot of young tech entrepreneurs on here. Anything that for them to keep in mind, and what's your world looking like?
Well, thank you very much for having me be a part of this. I feel like Wayne kind of carried everything. So my name's Kristen. I work at Fidelity. But for real though, I am in the commercial business lending department over at Fidelity, and I've been on the task force for these PPP loans for 10 months now. The CARES Act was passed, and they called me up and they said, "Hey, what are you doing this weekend? We need you to read this law." So we got to work, and we have tried to decipher all of this, this whole time, trying to figure it out. I think Wayne brought up a really good point about the success of this program. It has been huge. As evidenced, we were up, we were setting alarm clocks at 2 in the morning to input loans, doing all this stuff. Banks have worked really hard to get as much of this money as possible out to their customers, to our communities. I think something really important to remember is the more you can educate yourself about this program, the better off you'll be. They have said because this program is so successful, they expect Congress to keep this program in their tool belt as a recessionary aid. So when we see our next recession, it will be expected that this will probably come out again. Hopefully they forget that I was on the task force right by then. I'm joking. It's been an awesome program. It's been really great to help so many businesses in our community with this money who've so needed it. Another point Wayne mentioned was the loans over or 150,000 and below. I know at Fidelity, in our first round, that was 80% of our loans. We really worked to get as many of these small, independent contractors, sole proprietors, as many of those people helped as we could.
Very good. Thanks for, and appreciate that thought. I've maybe got a question to start off. If anybody on the call ends up having a question, feel free to stick it in the chat, but maybe one to start off for you all. As you were processing applications and loans over the last while, what were maybe some of the hangups in the application process that some folks on the phone, if they're thinking about getting a loan, what are some areas that maybe were big hangups that they should be thinking about right now, or maybe some reasons for rejections that folks can avoid on that front? Curious if you've got any thoughts there.
Wayne, go ahead. You look like you have something to say.
Well, so the application is really pretty straightforward. And I wish I would have maybe brought a picture of the application, but invariably, the things that came into play and the things that continue to throw a curveball in this today are things like change of ownership. If if midstream, I don't know, if one entity is purchased by another. I know that in terms of loan forgiveness, that's throwing a little bit of a curve because the EIN number, maybe changes. And anyway, so I know that those scenarios can be curves. But in terms of applications and things, the lender has to verify the information that's provided. And the basic information that's been provided is like what type of entity, what's your legal structure? Do you have to list, I believe, the partners that have at least 20% or more ownership. And then there's some other things in terms of legal infractions. I think there's a window that, and Christian, you can help me out here if you've looked at the application recently. But there are a few things that have been hurdles. And literally, as this program was rolled out, one of the things that comes to mind is there was a community of ex-offenders, right, that were well beyond, all of the, probationary or parole, kind of status. They were thriving business owners, and this is across the country. There were that community advocated, and others advocated that the criteria be modified, and this was kind of midstream in that first round. And it led to an increase. Ultimately, they did change some of the requirements and extended some flexibilities there that then allowed others to participate. And there were local business owners who employed hundreds of people that had legal infractions that were preventing them initially from being able to obtain a PPP loan. Ultimately, that got changed and it was able to impact a number of businesses. But I don't know, Christian, if you've got any examples of some other things that have been maybe hurdles or curveballs.
I would say from the banker side, we've had a lot of smaller customers, the sole proprietors, independent contractors, that they see a form like this and they're just nervous. They're scared they're going to make a mistake. They're scared they're going to provide the wrong documentation. And it can be a little intimidating signing a government form, and you attest that nothing on there is incorrect. So I think it just scares people. Our larger customers, they have a legal team and an accounting firm that they can go to and make sure that this is all correct before they submit it. Some of these smaller ones, they don't know that they file their taxes for their business on a Schedule C. And so when you ask them, I need your Schedule C, and that's how we'll calculate your loan amount, you have to first explain what their Schedule C is and all of that. So that's been a big hurdle. One thing that we did to help, and I think a lot of banks have done this time around, we partnered with a fintech that has helped simplify the application for our borrowers. And the borrower logs in. It's been amazing. The borrower logs in, drives the entire application process, submits their supporting documentation, and it has allowed us to do so much more of these loans in a faster time. I wish we would have had this around the first time. I wish we would have known about it. I think it took us 4.5 days the first time around to get to the same volume that we were able to submit to the SBA on the very first day. So the amount of time that it's been able, that innovation has been incredible for our bank. So that's helped a lot. And it gives our borrowers more control and comfort with completing the application as well.
There is just to add here, there is a community of businesses that, unfortunately, if they started after February, what was it, February 15th or so, if they've started after that date of February 15th of 2020, that has been the most painstaking thing because they're ineligible, you know, and yeah, that has been probably the most troubling, the most concerning. You had businesses that started just literally before the pandemic happened, and that's been a problem.
Yeah, and that's something, you know, we've noticed just in our dealings with local and regional entrepreneurs. There's a you know, with great financial trouble, some wonderful things are birthed out of them, and some really interesting companies have been birthed in the last, you know, 6 to 9 months. So interesting to hear that perspective there. Maybe I know we've gotten a couple minutes over, but I'll open it up to the floor. You know, feel free to unmute, send something in chat. We've got some two really fantastic minds and perspectives on the call. Any questions for them?
Todd Gentry from Hyperborean here in Wichita, Kansas, and I've actually got 2 questions. One of them is that under the CARES Act, there was actually money in the CARES Act for service providers to help with preparation of applications. So as an example, our CPA firm reached out and said, we'll do this for you. We're getting paid to do this. And they processed our payroll, so it worked out fantastic. So question number 1, is there money in the second bill that does the same? And I'll pause there for a minute.
Oh, you're muted, Wayne.
Okay, that's an excellent question, and it's one I need to go back and take a look at, because there's been a lot of back and forth about that fee, and I don't know if Christian, have you heard anything else about that? Because there are a number of service providers and CPA firms, so on and so forth, that are helping business owners with their applications. I'm just not sure if those monies are still available through the Economic Aid Act.
Wayne, help me out. If on a typical SBA loan, the bank is required to pay those fees anyway, right?
Correct.
Okay, so it should not cost the borrower any money. Either it'll come out of the SBA or it'll come out of the bank.
I'll get later today, I'll send an email over to Quinn so that he can disperse that information. If there's any nuance that's different on that, I'll provide an update on that.
Cool, thank you. Second question is that we qualified for and received the first round of the PPP financing. We, like many startups, are pre-revenue at this point. So it looks like round 2 we don't qualify for because we can't show a loss or a decrease in revenue since we don't have any. Is there a workaround? Is there some kind of proxy for that based on investment activity in the company before COVID, after COVID? And then I was intrigued also by a comment you made early in the presentation about increasing the amount of the round 1 PPP loan. Is that an option for the pre-revenue companies that have a PPP loan in place?
Yeah, that could be an option. I want to make sure. Can you guys hear me? I'm not muted, right? All right. So it could be an option Did you have partners involved in how are you structured for that first round on the PPP?
We were a single member LLC.
Okay. All right. Well, what I recall in the second, what I recall in terms of increasing the loan amount is if the partner's income was not factored into your eligible loan amount, you could, if you have not been forgiven already on the first PPP, you could go back. That's one of those nuances that you could go back and increase your amount on the first loan. So yeah, and Godspeed, because I just had, right before this call, we had a scenario where a bank, equity bank called, they've got a client who got a PPP in the first round, and similar situation. Well, the situation was they were eligible for one amount. They did not take the full amount. They took maybe 50% of that. And later, after the rules have come out now on this round, they see that, number one, their business remains hurting, and they wanted to go back and increase that first PPP loan. Well, literally, the lender just received their forgiveness approval on the first loan. So they were calling to see if there was any remedy to undo that so they could increase the first loan. And then in that scenario, they're still eligible to come back and get a second draw as well. So they're eligible to get the second draw. In your case, you mentioned that you didn't have, which is interesting. You said you didn't have income in 2020 or revenues in 2020 or maybe 2019
Yes.
to compare. Did you have, yeah, we may want to visit further offline. I'd like one of my lender relations specialists to look at your scenario, because if you had income at the end of 2019 that you could compare to subsequent quarters in 2020, I think we might be able to do something there. But I'd just like to visit offline further.
I'll reach out via email and see if we can get an appointment set up for a quick call.
Okay.
Thank
Okay.
you, Wayne.
We'll do.
Todd, another thing to think about, and I don't know very much about the program since banks aren't involved in it. I don't know if the EIDL program might be able to help you a little bit more than PPP since you guys are pre-revenue.
We did apply for EIDL. Same challenge. You have to show a loss of revenue to have an economic injury, and therefore, after months of paperwork, they said so.
Yeah, it's based on that one is based on operating expenses. Basically, they look at your operating expenses and try to project out, operating expenses for 6 months, and that becomes the basis of the EIDL loan. And so, yeah, we can visit offline if there's anything that can be done. We really have good people that will look at all of the details locally and be able to let you know if what could be done, if anything, and we'll go from there.
Thank you so much, and sorry to monopolize so much of the Q&A.
No worries.
No, not at all. Hey guys, it's Josh. Todd, that's a great question. We've heard that from others and hadn't really advanced it or moved it forward. But the companies with no revenue to then have to rep that my zero revenue went down, like how? Because I actually had a greater. So the one question we had that we never answered was, did you just show a greater loss? So as opposed to repping to a reduction in revenue, did you increase your expenses in a way that your net loss was greater from year to year? We haven't asked that question of anyone, but it was something that we had come up as just like, I wonder if this would work.
Yeah, that's a good question. It talks about the 25% reduction in total revenues. And then in the IFR, it gives a full list of what satisfies that. And only the best I could give on that is in these specific scenarios where there's a loss and now there's a greater loss. we just have to look at it, compare it to the information there, and get an answer.
Josh, that's actually a fairly good segue maybe from my question. First and foremost, Kristen and Wayne and everybody on here, thanks so much, because you just answered very quickly a summation of my questions about it. Sole proprietors, launched my business June of 2020. So you've just answered my eligibility questions. I've been at a couple startup functions that people have been saying you need to check into this, but I really had no employees. So my assumption was I wouldn't have been eligible anyway, but you've kind of answered that. But Josh, your segue there about whether you've increased your expenses. Again, I'm a sole proprietor. I've not afforded myself a salary yet. I'm not in a position to do that with the business, but I have a lot of business development expenses, and clearly many expenses in 2020 far greater than even second half of 2020 versus first half of 2020. That I don't know, again, my hunch is it's still in the spirit of PPP. I don't think I really qualify for what it was intended to do because I'm still in development. That's part of development. But I guess, so if anybody has any other comment on that, but my assumption is it's not eligible. But my question then segues into small business loans. I have actually inquired about small business loans and went about a different means of funding because the SBA loan rate, I guess I only really inquired one place, but the SBA loan rates seemed extraordinarily high. And so comments about what is an average loan rate in the SBA area?
Well, if at the moment rates are pretty low. Really.
Tell me what that is to you. What does that mean?
Wayne, if you'd like to, I can jump in on some potential options that I have at SCED.
That'd be great. That'd be great.
So thank you, everyone. My name is Natalie, and I'm the Business Development Officer, Program Manager at South Central Kansas Economic Development District. We're just up in East Wichita, Bel Air, but we're all working remote. This is the one day I chose not to get dressed for a Zoom, and I forgot about this Zoom because I'm in my inbox, so I apologize for my sweatshirt, but
you look fine.
I'm glad to see that Josh and Quinn are with me on Friday. So
it's the age of no masks.
That's right. So please contact me. My name, again, is Natalie Santanil. I'm on LinkedIn. My number is 316-651-6393. Our organization exists for those individuals who are unable to gain traditional lending. Within Josh's sphere, there's going to be a lot of those service-based businesses that banks are not willing to lend on because they typically like to lend on things they can get their hands on if they default. So we're a good option. Tanya, and to everyone, I will let you know that on average, I get probably about 25 business development calls. And in those calls, I've identified a qualitative trend that businesses are just running on fumes. And those people who are ineligible for PPP or EIDL, they need some sort of an injection. And so I went to my board and I advocated for all of you entrepreneurs to get just what you said, Tanya, that SBA microloan rate down. It was at 8%. And so I was able to gain board approval. Yeah, I got it down to 3.5%, and I'll be running that interest rate through June 30th, 2021. I'll reassess the economy at that time. Now, Tanya, I'll tell you, as a nonprofit, I have to watch my budget because I'm passionate about serving entrepreneurs and I want to make sure that this program stays intact. So I have to make sure that my budget is positive. And so I will have to kind of reassess, can we continue to afford 3.5% interest rate? But it's available now, come and see me. And those would be for microloans under 50,000. In some, I have loan options, small, medium, and then your more complex commercial real estate loans available.
Hey, Natalie, I want to ask you something that I think is important here too. Does so our loan or the micro loan, $50,000, right? That's the maximum. Does the Network Kansas revolving loan fund, does that come into play if there's a need for any other to match with that?
You know, I'm not as well skilled on Network Kansas, Wayne, so we can certainly give referrals to that. I can only represent the loan programs that I have. I'm not as educated on Network Kansas and their services, but I do know that at SCED, we have, again, micro, mid-size, and those more complex
Okay.
Commercial real estate.
Okay. Okay. Network Kansas, and if I would have thought about it, I would have their information here, but Network Kansas kind of has a gap loan program that matches the terms of the priority financing, or the first position. They'll match it, and then they're on the back end. So we'll get some information on Network Kansas, that option.
So I think, Tanya, all he's saying is if you needed, say, for example, 75, if we were unable to finance the full 75,000 because we felt there was risk,
Right.
I could say I can do 50, and then you need to go see Network Kansas. That would be an
Absolutely.
automatic where they would come in and give you that extra 25.
Absolutely.
Now, I will tell you, we do have those instances, but we've got a lot of different loan solutions. So typically we're able to service the full need if you qualify. So there's still qualifications, and it's an educational process. I have been discussing with entrepreneurs what it takes in order to get a business loan, and it is on our SCED's Facebook page for you to check out. It's like a 12-15 minute video.
Okay. Thank you.
Huh?
That I think rolls into maybe an area, just, Natalie, Wayne, Kristen, what would be the best way if folks, whether you're listening in right now or you're, have a question later on, what's the best way to contact you, or maybe the right point of contact in your org, and just kind of go around the horn there?
I'll go first. Natalie Santanil, again, either myself or my colleague, Tyler Ward, we basically co-lead the business development. I've given you my contact. Again, it's 316-651-6393. Josh and Quinn have my contact information, and I'm also on LinkedIn.
All right. And I just dropped my email in the chat. Email address is wayne.bell@sba.gov. You can one of the easiest things to do is just go to our website, sba.gov, and then you get to the Wichita District Office. We have a listing of our directory there. You can call me, you can email me. I've got our other team members are there. And we work very closely. SCED is a partner of ours. They're our micro lender. They also do the 504 loans that are for longer fixed assets, that sort of thing. So, and then certainly, if you want any other information, there's a host of, tools and resources, I think that could be beneficial. Just depends on your business and what you're looking to do.
I also dropped my contact information in the chat box. If you have any questions, or just feel free to reach out to me. If you just are uncertain on how scary an application can be, or whatever, just give me a call and I'll be sure to help out.
Thank you.
Sounds good.
All right, and I just put my cell. So, so you got the cell number as well. So I just put my cell number there in the chat. But email, I find that really my email is the best, because what I can do, if you'll send just a few details in the email, I can then send it to the team member with an ask that they get right back to you. And so if it's best that one of our lender relations specialists get involved, or another member of the team, that's really been helpful to have those details that I can share pretty quickly.
Okay. Just FYI, I'm going to share with you right now. I actually have financing in place to take care of where I'm at. So if my call is not to you just immediately, I'm actually, this is really very helpful for reconnaissance right now, just to figure out where do you go when this is coming. I don't have an immediate need right now, but I'm kind of really more seeking my more financial needs. There's really hitting seed funding level at this point, but does not mean I'm not sure when I'm going to have to hire help. And that's going to be coming sometime, but I haven't I don't know that trigger point just yet.
And again, sole proprietors are eligible, you know, for PPP. Sole proprietors are eligible without employees. It gets tied back to that calculation that I showed on a few slides back, your Schedule C, what is it, Schedule C line 31. And, you know, that factors into it. But if you have any questions, and remember, as long as you were established, I believe, before February 15th of 2020. Okay, if it's after that, then yeah, that becomes a problem there. But yeah, okay. Well, give us a shout if you have any questions.
All right, thank you.
So Tana, I would go back to one of the very first things that Wayne had mentioned in the first round of the PPP distributions, which were there were many groups that were unable to secure funding, and generally because they didn't have relationships with their banking partners. You happen to be in a community with some very community focused and present banks. And so if you don't have relationship with I'll plug all of our local community banks. You know, the folks who had a hard time were trying to run to Citi and Chase and B of A and Wells Fargo. That's not who kind of dominates the markets here. It's the Emprises, it's the Equities, it's the Fidelities, it's the Intrusts. And so if you don't have good relationship there, now's a great time to build it for if and when you need it. And, you know, Fidelity's on here with great, but there's others as well if you don't have that.
All good.
All right. Well, I know we're folks may be needing to hop to a noon call here soon, so I want to be respectful of folks' time. But for the folks that are on, both panelists, thank you guys for your time and extended time afterwards as well. Great to hear your perspectives and insights and feedback. For the folks that are hopping on as kind of sitting in the founder seat as well and attendees, we'll continue to do these on a monthly basis. I've got emails and all of that down, so I'll continue to add folks to our distribution list. But if you don't feel like or if you need to get added and just want to make sure you are, Quinn@nextus.io. Feel free to reach out. If you've got thoughts on future content, future topics that you want to cover, or anything like that as well, also feel free to send that my way as well. But again, everyone, thanks for hopping on the call today, and have a good rest of the day. All right.
Super.
Right, appreciate it.
Thanks, everybody.
Thanks, everybody.
Thanks everyone for the time.
Right, bye-bye.